Hello everyone. In this lecture, we are moving ahead with other deductions. In the previous videos, we have covered deductions from section 30 to 35. And in this video, we are covering with section number 36 and 37. So starting with section 36 deals with other deductions and its first deduction is insurance premium. So if any insurance is being taken for the damage against the stock or any material that is being kept in the business or that is being used in the business or profession. So in regard to it, any insurance is being taken and any premium is paid in respect to that. So that amount will be allowed as deduction. Now, whenever I say deduction, that means it is an allowable expense. Second is health insurance premium of employee. Again, if any premium is being paid by the employer for the health of his employee, then that insurance premium will also be allowed as deduction. Another is bonus or commission. So, with regard to salary which is being given, and apart from salary, any bonus or commission in addition to salary is being given to the employee. So even that is allowed as deduction, but provided the payment is actually being made and it will be allowed in the year in which the payment is actually made. Okay. Then another is interest on borrowed capital. Now, if any amount that you have borrowed and upon that borrowed capital you are paying certain kind of interest, again that interest will be allowed as deduction. But again, the condition is the amount which you have borrowed, that amount, that money should be used in your business or profession of the assessee. If it does not happen, then no deduction shall be allowed. Then next is contribution to provident or superannuation fund. So if the employer contributes towards any provident fund or superannuation fund of the employee, then again that amount is allowed as deduction. Then here certain limits are prescribed. So according to those limits only, the contribution which is being done by the employer towards the employee will be allowed as deduction. Next is employer contribution towards employee pension scheme. Now this has a limit of 10%. That means whatever employer is contributing towards the employee pension scheme. Okay. So 10% of employee salary, whatever the employee salary is, its 10% contribution will be allowed as deduction. If the contribution is being made more than 10%, then that will not be allowed as deduction. It will be disallowed. Okay. Now here the meaning of salary is the basic pay, dearness allowance which enters, and the commission on turnover. Combining these three, whatever amount is, its 10% contribution will be allowed as deduction. If it happens to be more than 10%, then it will be disallowed. The next is contribution to approved gratuity fund. So if the contribution is being made towards any gratuity fund by the assessee, assessee means the employer, okay, then it is also gratuity fund for the employee, obviously, right? So it will be allowed as deduction. The next is with regard to bad debts. Now this is a point to be taken care of. We all know what bad debts are, right? So, and we generally write bad debts as an allowable expense whenever you make a P&L account. But there are certain conditions with regard to it. So deduction is allowed in respect of bad debts of the business or profession which has become irrecoverable. Debts which are irrecoverable, obviously those debts become bad. So with regard to that, if any debt become bad or which become irrecoverable, upon that it will be allowed as deduction. That means it will be allowed to be treated as expense. Now that debt which has turned bad should be of the business or the profession which the assessee is running. If it is not related to it, then it will not be allowed as deduction. Okay. So if you want that the deduction of bad debt should be claimed, then that debt should be of the business or the profession which you are running. Now, if bad debts happens of any discontinued business and the business discontinues before the commencement of the accounting year, then you cannot claim any deduction. Okay. Now, there is another point of bad debts recovered. Now, supposingly that if any in previous year any of your debt became bad and you have already treated as your expense and deduction was claimed, and by chance in this year you have recovered that amount, maybe in full or maybe some amount of it you have recovered, so then that amount will be treated as income in which it is recovered and shall be liable to tax, because earlier you have already taken its deduction, you have already written it off in your P&L account. So in the previous year you have already treated it as an expense and you have treated it and you have taken the deduction of the same. But in this year or in forthcoming year, you received that amount, you recovered that amount. So whatever amount you have recovered and upon which you have already taken a deduction will be treated as income, but in which year? The year in which it is recovered. Okay. Then there is another point of bad debts recovered disallowed earlier. Now, supposingly, if in any year your bad debts occurred and you were not allowed to treat it as an expense, okay, and in the coming year you recovered that amount, then that amount will not be treated as your income. Okay, because what happened was when your debt became bad and you were not allowed, it was disallowed, that means it was not allowed to be treated as expense, that means you have already given tax upon it. Now in this year when you have recovered that amount or you have realized that amount, maybe full amount or maybe a partially you have recovered partially, then it will not be treated as income, because upon that you have already paid the income tax the year in which you were not allowed to be treated as an expense. Now moving on to section number 37. Now these are general deductions. General deductions means all those deductions which were not covered from section 30 to 36. We generally say this is as a residual deduction or residual section also, because there are various other expenses which the business has and it may happen that those expenses are not covered from section 30 to 36. So this has a big list which covers all the expenses. Supposingly, we haven't talked of any advertisement expenditure yet, if you remember from section 30 to 36, which we have discussed. But obviously, it is related to the business if you are incurring this expense. So you should be allowed to be treated as an expense. So there is a list of deductions under section 37, but there are certain conditions. Now those conditions are, that means first is such expenditure should not have been covered under section 30 to 36. That means if you've already taken deduction of certain expenditure which is covered under section 30 to 36, then that deduction will not be allowed under section 37. Reason being that you've already taken a deduction under section 30 to 36, it is already covered in those sections. Then you will not be allowed to treat it as deduction under section 37. Then these deductions should not be of capital nature. That means deduction is available if it is of revenue nature. Then these expenditures should have been incurred in the previous year. If you have not incurred certain kind of expenditure, then on what are you claiming the deduction? So in order to claim a deduction, the expenditure must have been done. Then the expenditure should not be of personal nature. That means it should be of business nature. And the expenditure should be wholly and exclusively for the purpose of business or profession. Any other expenditure other than this will not be treated as an expense. Now, just to summarize it, general deduction under section 37, that means any expense which is incurred during the previous year and which is wholly and exclusively for the business or profession, which is incurred during the previous year, and that expenditure is typically of the business which you are running or the profession which you are doing. So those expenses will be allowed as deduction under section 37. So and further conditions are that it these should not be covered under section 30 to 36, then should not be of a capital nature and should not be of personal nature. Then these will be allowed as deduction under section 37. Example, we can take it as advertisement expense. Now here I have attached an image which has the list of all the deductions under section 37. So you can clearly see that it is quite a big list. Okay, so you can read it out from here and you can just remember few points from section 37. So it has 33 points in all, which are covered under section 37. We treat it as a residual expense, residual section, because why residual section? Because these are not covered from section 30 to 36, but business has many other expenses which needed to be incurred, and the business person can claim deduction upon that. So these were from section 36 to 37 which I have discussed in this video. Now in the upcoming lecture I will cover with section number 32, which we are left with. It is related to depreciation and it is the most important part of chapter PGBP. So that's all for today. Thank you.